What's up, guys? You already know it's your favorite by Fozal Tips, and I'm back again on your screen, guys. You already know whenever you see me, you know I'm coming with some tips. Anyway, guys, it's been a minute since we've made a video about tutorials. We made a video about teaching like this. We are back again, and we're about to give you another tip. Just another tip, another banger. Today we are going to be talking about how to read chart as a trader and use it in your advantage to make money. So yes, it's simple, guys. You know, a lot of people make this like a rocket science, but it's not a rocket science. Very easy. When you're motivated, when you know what you're doing, it's very easy. When reading the chart, these are two key things you must put in place. The first and the very most important thing is time. You know, just as in life, time is everything. Everything that you do in life, it revolves around time. So if people were able to manage time, they'll be able to get a lot of stuff done. Just the same as in trading, time is the most essential factor, the most essential tool needed. So yes, we'll talk about that. And market structure. Now, structure is a very important one. When I mean market structure, I don't mean market structure as a strategy, but how the market is behaving. Because with time and price, it creates how the market reacts. Time and price create market structure. After time, you're going to look at the direction where the market is going, right? After market has created those structures, it will start showing you the direction that market is heading to. Is it in an uptrend, downtrend, or just consolidating? Consolidation could be accumulation or distribution. A period where market doesn't have a significant direction, it's just moving sideways. That is called market structure. That's the structure that price is creating with respect to time. So let's head to our chart and let's show you how important these factors are. Alright, first and foremost, let's head to our chart. First of all, you're going to type in TradingView. TradingView gives you access to all of the trading instruments that you need. TradingView review everything that is tradable. So it's better using TradingView. Other exchanges have their own way of viewing the market, but when you use TradingView, it gives you everything that you need. You just need to click here, search on it, whatever product. Since we trade crypto a lot, we are just going to get one crypto. If you want it in a particular exchange, it will be right here, right? So you type search and say BTC USDT, right? It will give you a whole bunch of them. Now we need to select and choose the one that is on our exchange. Now all of this just totally depend on you. Like we said, the very first thing first, when we come to the chart, the first thing that we do is we look at our time. What is the time here? The time is 1 day. Now, this D means 1 day, right? It means every one of these candlesticks that you're seeing here, they are being represented by the duration of 1 day. It's price action plus the duration of 1 day. So, for instance, let's go to the recent one. The price of Bitcoin moved a $4,438 this time. And it ended up closing up, right? So that alone was an entire day. But if you zoom in into entire day, if you change the time and you put another time, you will see that within that 1 day right there, right, you have 24 hours. All of that happened within the period of 1 day. So every single day, the market has the way it moves. So now if we break it down to 1 hour, it means that every single one of these represent 1 hour. So time is always essential. Everything happens with time. When you look at your time, the next thing to do is look at the market structure. Now, what is the direction of this chart that you're seeing in front of you? With the recent history and what we can see immediately in front of us, the market doesn't have a specific direction given the past history, because this is just not happening. So given market was consolidating, still gearing up, still looking for where it wants to go. So at that point, you wouldn't really say the market is in any particular trend, but it's in a consolidation. When you've seen that, it will give you your trade idea, will give you the type of trades that you want to trade, right? And then the third thing, which is very important as well, is in every market, no matter what direction is, you look at the freshest height and the freshest low the market has created, and you map those areas. Now let's come to this chart, right? I always tell my students, wherever your range is, you are the master of your own decision. When you've chosen a range, make sure that you treat that range as such. So in this case, where was the freshest low? Right here, right? That's the freshest low the market made in this case, because now we are treating this as our range. So we call this a range low. Even though Now on this market look like it's in an uptrend. But if you look at a little bit of the big data, it looks like that market is just in a sideways. But just of right now today, the market is trying to kick out of that consolidation zone. So after you map your range, you wait for price to trade outside of that range. This is just simple how to look at the direction of where the market will go. This is not strategy for you to use and trade, but perhaps a lot of people use that because that is breakout. When the market break one of those range and close outside of it, it's called breakout, right? You trade and stop somewhere inside of it. Now we're not talking about trading strategies on this one, but if you would like for me to give you trading strategy that you can use, comment down below and we'll do that for you. So when you map your range high and your range low, you wait for price to trade outside of your range, either the highs or the low. Then you know where it will give you a good reasoning on where the market is heading. So it will give you a way to build your trade. It will give you the way to know, have confidence on taking trade on a particular direction. Just common sense. If you buy price on top of that range, just like click and buy, because price is going up, right? When price is breaking out, it means that when price is breaking out of your upper range, means that price wants to continue going higher. So if price is able to break and close above that range high, it means that that price will continue going higher, right? So now what is that range high? That range high is resistance and the range low is support. Range high is resistance, range low is support. Now you're going to treat it totally on how you trade. So let me know what you think about this video. It's just a quick way of trying to reach out to show you guys how it's easy to read the chart. And let me know if you want me to make a video on trading strategies and elaborate on a particular type of strategy to use as beginner, and I will do that for you guys. Also help me like and comment what you think about this. Also help me share this video to some people like you that want to watch this, so that YouTube will see that we are doing something great and they will use the algorithm and send it to people that need it. All right, I love you guys. Spam the comment section with some comments and I'll make more videos for you guys. Stay supporting me, stay encouraging me, and also let me know that I'm doing something good. Peace, and I'll see you guys on the next video.